topping today. We're now joined by Rebecca Walser. She's the president of Walser Wealth Management. Rebecca, it's great to have you with us. Investors feeling optimistic about this news from Gilead. Are you optimistic about it? Okay, I think we lost Rebecca there. We're going to get Rebecca back. But anyway, we are seeing a market that is higher by about 1.5% across the board. Oil higher today. That is a good sign for these markets. But again, markets really took a leg higher after this Gilead news that its remdesivir treatment has been shown to be effective. We are going to wait to get more data on this ahead. Rebecca, I want to welcome you back in here as we work out our all of our Kings broadcasting from home. We don't have a lot of them, but it's good to see you. And so I want you to break down this Gilead news and what it means for investors.
Yeah, I mean, obviously, any kind of medical discovery that right now is a positive, controlled study. And that's what this is. I mean, I don't want to say that it's a cure. Obviously, we're not saying that. But, it can kind of be assimilated to like Tamiflu for the flu. You get the flu, you get coronavirus, you potentially take Remdesivir. I can't pronounce it exactly correctly. And within 5 days, people that took it within 5 days, 50% of them were actually going, better and were discharged from the hospital within 14 days. And then there was a longer term 10-day group, and they also showed that they improved and were discharged within 14 days from the hospital. So you're starting to see potentially, something that would, even if infected, lead to a successful health recovery. And that's huge.
Mm-hmm. So even though we know that a vaccine is months away, perhaps 18 months away before we can actually get a vaccine, can this provide long-lasting reassurance and more safety to governments, to Americans, to investors? A lot of governments, is this data that they can use to determine how to reopen their economies?
Yeah, I think what it is like right now we didn't have, this is obviously a novel virus that we were dealing with globally for the first time. And so we don't have any medical science. And so we all had to just close down, which we did. We closed down. But now the economic impacts are being felt and we have to reopen. And so how do we reopen? Well, I hate to say this so sort of directly, but the fact is, if we go out into society and we get sick, we don't close down because we have the flu virus every year. We get sick and we deal with it, and there's enough medical protocols that we can deal with it successfully. And some people will have a cold, or have a flu symptom, but we don't have we do have deaths at the older age. That's not true. But what I'm saying is that we need a medical protocol that allows us to be America or to open and operate globally, yet not die. So we need something that will prevent death. We're willing every day to go out and take the risk of sickness, but we don't want to put our lives on the line. And that's what we're looking for. So this changes everything. If we can get something that really shows, yes, we can work and get the virus, but yet still not pass away, which is what we all really care about. That's why we just are completely shut down. We need that to get us to reopen.
So Rebecca, investors certainly optimistic today. Major indices now up roughly 2%, but we've rallied more than 30% now. I mean, close to 32% off of our March 23rd lows on the S&P 500. And even though this is good news today, do the markets have a larger path ahead of them? Can they really rally much higher from this, given the uncertainties that still exist and the fact that we don't have a vaccine?
Yeah, I'm not one of those that thinks that the worst is behind us just yet. I do think that earnings season, as it's already started in earnest, is going to give us a much better picture of the reality of this. It's really easy to say close down. It's really hard to swallow that pill once the numbers start coming in. And once we see these impacts of like potentially meat processing plants closing and not having the meat to buy in the groceries, or all of these things are going to now start to be felt in the actual data of the economics of what we've done. And so I do think that investors, as they start to see the reality of how it's impacted different companies. Obviously, some companies are going to be less impacted because they have streams of commerce that are going to actually expand, like YouTube revenue, for example, with Alphabet yesterday. But the fact is that, we are going to see a contraction and investors starting to realize, wow, this is really having a huge impact. GDP numbers this morning being the first of those indicators. So yes, I do think we should be prepared for more pullback. That all of the picture is not rosy. I don't say a V recovery, I expect recovery.
Rebecca, sorry, just in the sake of time, I do want to keep it moving.
Yeah.
Your insight's great here. So let's talk about earnings, because Google up significantly this morning. Alphabet, the parent company of Google, that's taking all of the big tech names higher, which is another big boost for these stocks. Even Boeing higher after announcing a disappointing earnings quarter, but laying out many of its restructuring efforts here to try to steer the company back on track, though it has a long way ahead. How should investors be looking at this earnings season? And is a significant jump in Alphabet stock today, for instance, warranted?
I think it is. I think that what you can see with Alphabet specifically is that obviously YouTube revenue is up. Why is that? It's just like Netflix, right? Everyone's at home watching Netflix. Everyone is definitely, I've been a much bigger YouTube consumer over these last 5 weeks than I ever have been in my entire life. Churches are on YouTube. So you've got all of America, going to church through YouTube. So yeah, they have a diverse set of, revenues, and obviously Google search revenue being their biggest, but other things, cloud revenue and YouTube revenue up for them. And there's going to be a lot of that. A lot of businesses, Boeing, another one, where you're going to see, okay, yes, we didn't get the sales that we were projected to get, obviously, but we have other things that are sustaining us. I looked at Ford's balance sheet. They have the cash, they say, to last them if their plants are closed for the rest of the year. So, you've got different businesses saying, okay, let's take an assessment. Let's make a calculated risk here of what we should be doing and not be doing. And yeah, I definitely think that there is bright spot, and I think Alphabet definitely is an indicator of that.
Okay, Rebecca. So quickly, you mentioned that you think the worst is not behind us. Do you anticipate that we will retest those March 23rd lows?
I hope not, but I definitely did when I sat down and looked at all of the resistance and everything. I do think that we will see some retraction back to that. Hopefully not to the $18,000 Dow number that we were looking at. That would be really bad. But I do see some pullback and then a forward goer. I think we'll get to at least $25,000 or 25,000 on the Dow pretty soon. But I just don't know when. And I do see a retention before that. So let's see what happens. Earnings season is going to be a bitter pill in some cases to swallow.
All right, Rebecca Walser, she's the president of Walser Wealth Management. Thanks again, Rebecca.